Okay, welcome to the Pilla Tax Podcast. We got Mr. Dan Pilla back here again. In many opinions across the nation, he is the foremost tax authority when it comes to education, information, and really standing for the people. And so, Dan, just to get right into it, just coming in hot, what's all this talk about the employee retention credit? There's a lot of confusion, a lot of excitement. It's all over the place. What is the employee retention credit, first and foremost, Dan?
Yeah, first of all, the employee retention credit, Jay, is a refundable credit that was created in the law as part of the CARES Act in March of 2020. And this law was designed to provide a cash benefit to employers for keeping their employees on the payroll during the COVID shutdown period. Of course, everybody remembers, everybody knows about all the drastic shutdowns that occurred starting late March, April of 2020, going all through, in many cases, going all through 2020. This CARES Act provision created a refundable credit based on a percentage of the wages paid to employees. All right, so this was, Jay, when I say refundable credit, I mean you can get more money back from the government than you paid in the first place. All right, wow. It's the business equivalent to the earned income tax credit. The earned income tax credit is a huge refundable credit. It's really, Jay, it really is a welfare program that's administered by the Internal Revenue Service through tax refund programs. That's what the earned income tax credit is. The employee retention credit works somewhat the same way in that you can get money back from the government that you never paid in the first place based on the salaries that you are paying to employees during this COVID shutdown period. That's what the employee retention credit is. It's worth billions and billions. There's been, I think they funded it to the tune of about $85 billion, Jay, that was set aside to pay these employers. And there's been about 3.8 million claims now that have been made. So this is a big deal. A lot of businesses are doing this, and it's, it's a lot of excitement on the one hand for businesses because we're getting this money back, right?
That means some attention's coming from this certain three-letter agency then, right?
You are exactly right. You're precisely correct that the IRS is really starting to get panicked about this employee retention credit now, and they're starting.
Why would they be getting panicked, Dan? I mean,
well, that's a good question. If the credit is in the law, and I'm following the law, why aren't I able to claim the credit? Well, the answer is you are able to claim the credit, but here's what the problem is. The IRS is believing that more and more bogus claims for the credit are being made by businesses every single day. And in fact, IRS Commissioner Werfel came out with a statement. There have been actually 3 news releases that the IRS has put out. One in July, and then September, and then just recently here, October 19th, the IRS put out its 3rd one, where they're showing increasing concerns about the potential for bogus ERC credits. And one of the statements that Werfel made in one of these news releases was that the further we get away from the pandemic, he believes, or the IRS believes, the less likely it is that these claims are legitimate. Now, I don't particularly believe that, Jay. Because
why don't you believe that, Dan? That's a good question.
Yeah, because there's so much ignorance out there by people, particularly small businesses that don't have the day-to-day accounting and legal talent that they need to keep them current and keep them rolling here with compliance. These people don't know what the rules are. All right, that's number one. Number two, the employee retention credit is very, very complex. The IRS issued hundreds of pages of guidance on this credit in mid to late 2020, showing businesses how it works. But that wasn't enough, Jay, because the credit went through 3 different amendments since it was passed into law in March of 2020. It was amended 3 different times and then repealed. And the repeal in November of 2021 was made to apply retroactively.
Wow.
So it's a complete.
Okay, when it got repealed, did it get put back in place?
No, it hasn't been put back in. But here's what businesses need to understand today: the law is still effective for the period of time that was on the books. So
Okay.
from March of 2020 through September of 2021, businesses may still qualify. And from October 2021 to December of 2021, certain businesses can qualify. All right. So the broad brush occurs from March to September of 2021, and then a more narrow application
Okay.
applies from October, November, December, so the fourth quarter of 2021.
So how does a person know if they're eligible or not, Dan?
Well, that's what I'm getting to. What the IRS has done, Jay, is they've shut down the processing of these ERC applications. They've actually closed it down, and they've set up a whole scanning system here now to go through all of these claims with a fine-tooth comb to make sure they're not paying out bogus claims. Now, I understand they don't want to pay out bogus claims, and I will tell you this, as a business, you don't want to make a bogus claim to the IRS.
No.
Sure, you do not want to do that.
That's high probability you go into jail if you do that, right, Dan?
Well, it's a high probability of problems. All right. Now, the question of whether you're going to jail or not really depends on probably the dollars and cents that are involved.
Okay.
If
Yeah,
you're
just
making a
don't play
bogus
with
claim
that.
for
Don't
millions
play
of
with
dollars, you know, listen, I don't care if it's $1 million or $1,000.
Right.
You don't want anything to do with a bogus claim with the IRS. You just
Right.
All right. So the IRS is looking at these things very, very carefully now. What you need to do as a small business person is make sure that you align yourself with a competent tax professional that's got experience with this employee retention credit. Do not, Jay, do not work with a marketing company that's hustling you to sign up so that they can get commissions and so on as a result of generating this business. You want to deal with a tax preparation firm, a tax litigation firm that has specific experience in the employee retention credit. As I said, this is a very complicated.
You realize you said tax litigation, and so people are going to say, Dan, do you do this?
Well, yeah, we do it. We do this kind of work, Jay. But I'm not the only.
You will do an ER. You will help people with their ERC if they come to you.
Yeah, absolutely. We can do that.
Wow.
And as a matter of fact, I've taught classes to tax professionals on the ERC. Last year at my Taxpayers Defense Conference that we had in Phoenix last year, you were there, Jay, I believe.
Yes.
Yeah, you were there. I taught a class on the employee retention credit, and I've done a number of web classes since that time. So I understand the credit. There's people out there that understand the credit. You don't have to go it alone. I don't want you to go it alone. I want you to get competent professional help from someone who knows what they're doing so you don't make a bogus claim.
That's awesome. Now, I guess that you kind of went into it. So how do businesses safely do this? Did you answer the question? I think they just get a hold of you.
Well, let's talk about a couple of things. First of all, you have to be a qualifying business. All right. And this is where a lot of the confusion is coming from. And this is where professional marketing firms, not tax professionals, professional marketing firms are taking advantage of companies of businesses. That's what I'm trying to spit out here. They're taking advantage of businesses, Jay, that don't know the rules. In order to qualify,
and there's a lot of them, Dan. I mean, I see this stuff all over the place. I get calls all the time now.
Yeah, there's no question about it.
Yeah.
So in order to qualify, one of two things has to have happened to your business. All right. Number one, there had to be a drop in revenue. Now, depending on what period of time we're talking about, the drop in revenue changed. Okay, so during one period of time, it was a drop of X percent. During another period of time, it was a drop of Y percent. And this is where it gets confusing, is because you got all these different time periods and different rules apply to different time periods. But the first qualifier is, did your business have a drop in revenue? All right. The second thing is, and this is either or, Jay, you don't have to meet both of these conditions. You meet one condition or the other.
Gotcha.
Right. The second condition is, was your business fully or partially shut down as a result of a government ordered shutdown? All right. So, and it can be a federal, state, or local government order shutting down business operations. So, for example, restaurants couldn't have people come in, sit down,
inside,
anymore, right? They had to take out. Now, as I said, it's either a drop in revenue or you're subject to a business shutdown.
Like a gym, like a lot of gyms shut down.
Yeah, exactly right. Gyms had to shut down. All kinds of places shut down. I mean, there were businesses across the board that
clothing stores,
everything. Just go down the list, right? Now, you don't have to be in both categories. You don't have to have both a reduction in gross receipts and a shutdown order. It's one or the other.
So you could have had an increase. Like
I was just
some of these restaurants that were doing, they started doing more in takeout and their businesses went up.
Yeah, that's exactly right. There are businesses whose revenue increased substantially during the pandemic, but yet they were subject to a shutdown order. Those businesses can qualify for the employee retention credit. All right. So that
has to be like every restaurant probably, had an uptick because takeouts are crazy.
Yeah, the takeouts were crazy, no question about it. And so you just you got to look at your situation. Now, where the confusion is coming, Jay, is that some of these marketing companies are interpreting the government, the quote unquote shutdown thing, much more broadly than the law allows them to interpret it.
Okay.
Right. So what they're saying is that they're using this supply chain string argument, and they're saying that if a business that provides materials and supplies to you to facilitate your business, if that business was shut down and that shutdown affected your capacity to get raw materials for your product, then that means you were shut down, and that's not true, Jay.
Okay.
Right? So we got to understand that the shutdown order applies only to your specific industry, and so your specific business was subject to it.
I got to ask you a question on that before it slips by, because that means that a lot of the marketing companies are just trying to take a lot of stuff and then slap it up against the wall, and maybe people are just wasting their time.
Yeah, that's exactly right. And I think part of the problem is, well, it's anytime the government gets involved in giving away free money, Jay, there's waste, there's fraud, and there's abuse, right? Okay. It's just undeniable. The fact of the matter is the earned income tax credit has been on the books for 45 years or more. As long as I've been paying attention, there's been such a thing as an earned income tax credit. And it's been the number one source of fraud in the Internal Revenue Service system, for the last 30 or 40 years. The Government Accountability Office, which is the watchdog accounting function in Washington, D.C., that overlooks all of the various functions of the federal government, they deemed this EITC to be a high-risk program, and it's been considered a high-risk program for at least 2 decades because of waste, fraud, and abuse associated with getting free money from the government. All right. Man. And so this employee retention credit, unfortunately, is no different. A credit that was put in there designed to help businesses get over the hump from the pandemic shutdowns is being abused. And there's no question that billions and billions of dollars in improper refunds are being handed out, to the point where now the IRS has set up a special task force. And this is the thing I want to make clear with this. At this point here, and that is the Internal Revenue Service has now created a special task force, and there was actually a special prosecutor that the Biden administration assigned in the Justice Department to work these employee retention credit cases very, very aggressively. They're not playing games. So my advice to small businesses out there is, if you think you're entitled to an employee retention credit, make sure you're dealing with a qualified tax professional. And for those businesses that don't think they're entitled to an employee retention credit, don't think that is necessarily correct. All right, get somebody who's got experience in evaluating these things. Talk to somebody who knows what they're talking about, and get a proper analysis of your situation. The key is a full financial analysis of your situation is required. You can't just answer a few questions over the phone and say yes or no. That's what these marketing companies do. They ask you a few loaded questions. If you answer yes to, their half a dozen questions, then they say, yeah, haha, let's go. But you may not qualify. but that doesn't mean you don't qualify. So what I'm saying is make sure you're dealing with somebody who knows what they're talking about, so you get the benefit of the credit if you're entitled to it, and you don't end up making a bogus claim if you're not entitled to it.
Yeah, I mean, you got everything to gain, nothing to lose here, folks.
Right.
Everything.
Right. Yeah,
so you want to do this
right.
the right way. So, Dad, if somebody wanted to get a hold of you, are you taking as many people that will come, or is it limited? How does it work?
Well, no, we evaluate each situation, Jay. We can't take everybody, and we don't take everybody, but we evaluate the situation. And so people can get a hold of me at my website, which is taxhelponline.com. That's all one word, taxhelponline.com. And you buy any book off my website at any price point, Jay, you get a free consultation with me directly and personally. So taxhelponline.com is the place to go. Buy your book, get a free consult. In fact, my book, Dan Pilla's Small Business Tax Guide, is an excellent resource for any small business, whether you're in trouble with the IRS or not. You need that book, and you buy that book. It'll help your business. Plus, you'll get the consult with me directly and personally, and we can start the process.
Another thing, folks, get over to PillaTaxAcademy.com. If you own a business, you should be going through the business tax mastery course. Like Dan's got 5 hours of material, just laying that down meticulously to where you're earning money because you're not giving up as much money because of what you don't know. So, Dan, this has been a powerhouse podcast session. Any other closing words, Dan?
Well, there's no such thing as a hopeless tax case, Jay. I don't care what kind of tax problem you got with the IRS. There's always a way to resolve it. So go to taxhelponline.com, PillaTaxAcademy.com, educate yourself, equip yourself to deal with the IRS so you don't get run over.
Let's go, guys. We'll see you the next time. We keep bringing the fire here on Pilla Tax Podcast. Until the next time, take care, everybody. Bye.